How to invest your first $100, the smart way. Have you ever wondered why two people can start with the exact same $100, yet one ends up building real wealth while the other loses everything? Most people believe you need thousands of dollars to become an investor. They're wrong. In fact, your first $100 might be the most important money you'll ever invest, not because of its size, but because of the habits it creates. And before this video ends, I'll reveal the one mistake that keeps almost every beginner from growing that first $100 into something much bigger. Once you see it, you'll never look at investing the same way again. Red Circle Adrian Cole walks through a busy city street as people rush past him, each carrying coffee cups, shopping bags, and smartphones. Look around, Adrian says. Millions of people earn money every month. Yet only a small percentage ever build lasting wealth. Why? Is it intelligence? Luck? A high-paying job? Or is it something almost no one talks about? Before we answer that, consider this. Imagine two friends. Both receive exactly $100 on the same day. The first friend immediately searches online for the hottest stock today. The second spends a few hours learning how investing actually works before putting a single dollar into the market. 1 year later, which person do you think has a better chance of succeeding? Take a guess. The answer isn't as obvious as it seems. Pattern interrupt. What if I told you that some of the biggest investing mistakes aren't made after buying a stock? They're made before the first investment ever happens. We'll come back to that in a few minutes. For now, let's meet someone. Emily is 24 years old. She works a regular office job, pays rent, and doesn't consider herself good with money. One evening, after paying her bills, she notices exactly $100 sitting in her bank account. She almost spends it on new headphones. Instead, she asks herself a simple question. What if this $100 could buy me freedom instead of another gadget? That single question changed everything. Not overnight. Not in a month. But it completely changed the direction of her financial future. We'll follow Emily's journey throughout this video because what she discovers surprises almost everyone. Red Circle Adrian appears again, standing in front of a simple graph showing two lines slowly separating over time. Most beginners focus on finding the perfect investment, he explains. But successful investors focus on building the right system. Those are two very different goals. One depends on luck. The other depends on discipline. And discipline wins far more often than luck. Here's something even more surprising. According to legendary investor Warren Buffett, the best investment you can make is often in yourself. Because improving your knowledge increases the value of every financial decision you make afterward. Think about that. Before we decide where your first $100 should go, let's look at what happened when one beginner chased excitement instead of strategy, and why that mistake is costing millions of new investors money every single year. Let's go back to Emily. After deciding not to spend her extra $100, she opened her phone and searched for one thing. What's the fastest way to double my money? Within minutes, she was overwhelmed. One person claimed a cryptocurrency would make her rich overnight. Another promised a secret stock that was about to explode. A third insisted options trading was the only real way to build wealth. Who was telling the truth? The reality is that almost every beginner faces the same problem. There's too much advice, and much of it is designed to grab attention, not build wealth. Red Circle Adrian Cole appears in front of a wall filled with flashy headlines and social media posts. The market rewards patience, Adrian says, but the internet rewards excitement. Those are two very different things. Pattern interrupt. Here's a surprising question. If getting rich quickly really worked, why are so many people still searching for the next secret investment? That question alone should make you pause. Emily almost invested all $100 into a trending cryptocurrency because everyone online seemed excited about it. But before she clicked buy, she asked herself one simple question. Am I investing because I understand this, or because everyone else is talking about it? That question saved her from making a decision she would later regret. Legendary investor Warren Buffett has often said that the stock market is a tool for transferring money from the impatient to the patient. It's a simple sentence, but it explains why so many beginners struggle. They want fast results. Successful investors focus on long-term habits. So instead of chasing hype, Emily took a different approach. She spent time learning the basics: diversification, index funds, risk, and compound growth. Only then did she think about investing her money. Notice something important. Emily didn't delay because she was afraid. She delayed because she wanted to make an informed decision. There's a huge difference. Many people believe investing is about finding the perfect stock. In reality, it's often about avoiding the biggest mistakes. And one mistake stands above the rest. We'll reveal it near the end of this video because understanding it could completely change how you invest, not just your first $100, but every dollar after that. But before we get there, there's one strategy used by millions of successful investors that almost no beginner pays attention to. And once you understand it, choosing where to invest your first $100 becomes much easier. Transition to part 3. So, what is that strategy? And why do experts believe it's far more powerful than chasing the next hot stock? Let's break it down step by step. So, what would a smart investor actually do with their first $100? The answer may disappoint people looking for a shortcut. Because the smartest strategy is usually the simplest. Red circle Adrian Cole stands beside two paths on a digital financial chart. One path is exciting, he says. The other is boring. But history shows that boring often wins. Pattern interrupt. Imagine you could choose between a lottery ticket and owning a tiny piece of hundreds of successful companies. Which one gives you a better chance of building wealth over the next 20 years? Most beginners instinctively choose excitement. Experienced investors choose probability. That's why so many financial experts recommend low-cost index funds. Instead of betting everything on one company, an index fund spreads your money across many businesses, reducing risk while allowing your investment to grow with the market over time. This idea was championed by Jack Bogle, the founder of Vanguard. He believed that ordinary people didn't need to beat the market, they simply needed to own it. That single idea has helped millions of investors build wealth steadily. Now, let's return to Emily. Instead of investing her entire $100 in one trendy stock, she created a simple plan. She invested part of it in a broad index fund and kept the rest as cash while continuing to learn. It didn't make her rich in a week. Or even in a month. But something more important happened. She built confidence. And confidence is what allowed her to keep investing month after month. Here's a question for you. Another $100 every month, would you know exactly where to invest it? Or would you start searching for the next hot stock again? Leave your answer in the comments, I'd genuinely like to know. The truth is, successful investing isn't about making one brilliant decision. It's about making good decisions consistently. And that's where most people fail. They spend all their energy trying to predict tomorrow's winners instead of building a strategy they can follow for years. In just a moment, I'll reveal the mistake that quietly destroys more beginner portfolios than market crashes ever do. It's incredibly common, almost nobody talks about it, and avoiding it could make a bigger difference than picking the perfect investment. Transition to part 4. So before you invest your very first $100, there's one final lesson you need to hear. It may be the difference between giving up after a few months, or building wealth for decades.